Welcome to the Sharad Kohli show. There's a company in Canada, a very renowned company called Bank Credit Analyst. This has made an important advisory about investors of gold and silver across the world. We'll come back to what Bank Credit Analyst has said. But let us first understand the perspective. As I said, if you're connected to the world of investment, world of geoeconomics, or financial research, or financial investment decision making, it's always good to understand the perspective, the background in which the scenario as it stands today. We need to understand that very clearly. And the biggest flashpoint right now is Iran-US war, which may seem to be in a state of pause, but is far from over. And it almost seems like permanent. Strait of Hormuz seems to have become the new flashpoint. It's no more a waterway. This has become a theater of war. Now, to open Strait of Hormuz, Iran has laid down fresh conditions before US. I would have to read out those conditions to you. That will give you an idea if this is ever going to be met or this is ever going to open. I have a feeling this will never open, and this is why I say so. The first condition is Iran says US must lift all sanctions which have been historically levied on Iran. The second condition is it should end US military presence in that region entirely. Take back all the troops in the region back home. That's the second condition. The third condition is stop giving military threats to Iran again and again. This is the third condition. Fourth condition is end the naval blockade of Strait of Hormuz permanently. Remove the blockade permanently. Next condition is release all frozen assets of Iran in the US. There are a lot of frozen assets of Iran in the US. It wants US to defreeze all the assets so that money or assets can be liquidated and the money be brought home to Iran. Iran also wants a permanent end to conflict, a permanent end, not just an end to conflict. And last but not the least condition, this is most interesting of all, is that all these conditions would be fulfilled. Iran needs a promise. That is a condition on condition. For all these conditions, another condition that all the conditions listed above would be met. So with US, of course, having its demands, the nuclear thing, Strait of Hormuz being free and so on. So to me, as a geo-economic analyst, and a lot of me now is also a geopolitical analyst, I feel this war is never going to end. It will just drag on, at least for now. I don't want to sound pessimistic, but then this is almost seeming like unending. Donald Trump, over the weekend, made a post to his Truth Social saying, "Hello, Greenland." One of the US drilling companies has started drilling oil in Greenland to provoke. You remember a few months ago what happened? Donald Trump's desire and passion to take over Greenland, and Denmark and rest of Europe were infuriated. After that, he calmed down a bit. But then he's again said, "Hello, Greenland." This could again provoke Europe, the European Union, especially the countries which manage Greenland as of now. On the war front, things are not calm. It may appear calm between Iran and US, but Iran hit a UAE tanker. On the other side, Houthis hit Aramco. Aramco, mind you, is the Saudi Arabian oil producer, supposed to be world's largest oil producing company, Aramco. It's out of Saudi Arabia. So if you think that there was nothing happening over the weekend, no missiles fired, no drones, no, you're wrong. You're totally wrong, because there were things happening. We in India, we get lost amongst our own issues, that we forget that there is a rest of the world which is far bigger than our country itself in terms of size, not in terms of values, by the way. Keep a watch on the US this week. Around the 12th, US inflation numbers are going to come. And if the inflation numbers are high, of course, pressure on gold and silver is almost for sure. If the numbers are better, the chances of Fed increasing the interest rates would come down, and you will see another spike in the gold silver prices. Dollar index and bond yields, they again spiked because crude oil prices, ever since this Iran-US deadlock and these attacks surfaced, Crude oil once again is back to about $84, $85. Because of that, bond yields, which had come down to 4.6, now stand at 4.67. It's afternoon and 10th of August today. It's important to put a date stamp. Dollar index again creeping gradually towards 100. Well, not a good sign for gold, silver, although gold and silver holding fort. Gold, for example, now is about $43-30. Probably in anticipation of a more friendly inflation numbers and Fed not hiking the rate. So gold is right now focusing more on the Fed rates than on dollar index as of now. Of course, we've seen a softer dollar. Now let's come back to bank and credit analyst, this company which I spoke about in the beginning. They drew up a model. By the way, this company has been in existence since 1949. A very respected, a very reputed analytical firm which supplies data to merchant bankers, to investment bankers. It does macroeconomic research as well. As I said, it does investment research as well. Now, in April, May, June, it drew up a macro quant model, which said, this model said that gold is becoming bearish. Investment in gold may not yield results and people may lose money and so on. So very bearish on gold. This was in the month of April, May, when the gold was not going through the best of its times. The war was also on at that time. Remember, dollar index bond yield. So there was no rocket science in predicting that. Now suddenly this Canadian firm has turned around. It says it is worthwhile for investors to start accumulating gold. It is strategically logical and advisable to start accumulating gold because gold is going to be bullish in the times to come. So this has been a 360-degree turnaround of this reputed analyst from Canada. Now, if you get any clue, of course, you know what China has been doing. I keep talking about it. China has been accumulating gold like anything else, tons and tons of gold every month. And by the way, what China has also done is, from its stock of gold lying in the United Kingdom, it has transported a lot of that to Hong Kong because China is now wanting to make Hong Kong as the next gold hub. It wants Hong Kong to take the place of London as a bullion hub. That's going to be a big thing. In fact, don't be surprised if you start seeing in the months to come, or probably a year to come, two gold prices at the same time, just the way you see a Brent crude price and a WTI crude price. Of course, those crudes are also different, but China might have its own gold prices. May not be very far from the COMEX rates, but then who knows if that becomes a gold center. So accumulating gold is the recommendation of bank credit analysts in Canada. Accumulating gold is what China is saying by acting, not by saying anything. JP Morgan, Morgan Stanley, UBS, HSBC, all major institutions are bullish on gold. Well, this is not an investment advice. You'll have to invest by seeking advice from your SEBI registered financial or investment advisor. What I do here is an analysis. It's a knowledge capsule to enrich your knowledge so you become a better investor, a better finance person, a better, shall I say, economically enriched person. So you can augment your wealth, you can increase your income, or at least prevent yourself from incurring losses. If you like the contents of this analysis, I would humbly and fervently request you to please press the bell icon if you're new to the channel. The channel is very new. As I said, the channel actively got on air from 1st of August, although it started in July, but with one video a week. Now I'm trying to do one every day, of course, except Sunday. I'm trying to bring across to you updates every day. So please do subscribe. I'm sure you're new to the channel. There are only a handful of subscribers as of now, but I'm sure with your support, I'll be able to bring more and more information on a more regular basis, which I can guarantee will be very, very useful for you. So until we meet tomorrow, goodbye.